So I searched far and wide to find the best dividend ETFs that are out there. And today we're going to talk about the 5 best dividend ETFs where you can get that recurring dividend revenue. Number 1 is DVY, or the iShares Select Dividend ETF. And this ETF invests in US-based companies that have consistently paid a dividend out over a long period of time. Now, when it comes to this dividend ETF, we want to know some of the key metrics. So let's take a look at some of these key metrics so that we can go through and see, hey, what are we looking at here? So the first thing we're looking at is a fund benchmark. So this actually follows the Dow Jones US Select Dividend TRUSD at 100%. So that is the index that it is following, and it is a large value US equity dividend ETF. Now, the main things that we want to look at here are things like the turnover ratio. So the turnover ratio on this is about 15%, which is a low turnover ratio for something like a dividend ETF. Most of them have a slightly higher turnover ratio, so this is a great starting point to look at. Now, the expense ratio is high compared to something like an S&P 500 ETF, and for this one, the expense ratio is 0.38%. If you look at something like VOO or VTI, you're looking at 0.03%. This is a much higher expense ratio, so you got to factor in when you do your research. Now, with this dividend ETF, we have a yield, the SEC yield of 3.79%, which is what we have available on this. So that is a much higher dividend yield than would be a regular ETF that is out there, which is why we are looking at this, because it is a dividend ETF. Now, let's look at some of the rates of returns over the last couple of years and since inception. So you can see when it started, the first year it started was in 2003, and it had a return in 2003 because it started at the end of the year of 5.51%, then 17.92% in 2004, and then you can see how it traveled along over the last few decades. And over the last couple of years, in 2021, it had 31.68%, and then in a bear market in 2022, it had 1.82%, and it's progressing year over year. So over this time frame, you can see some of those total returns and how this fluctuates. And you should use this always, as we go through all of these, as a lesson. Funds go up and funds go down some years. You can see the years where it's going down, 2006 or 2007 and 2008. We had the Great Recession, and you can go look through there and then see how much it's bounced back since those worst years. And then let's look at the top 10 holdings of this as well for DVI. So when you look at some of these top 10 holdings, there are going to be some companies you recognize and then some you don't. But some of these are long-term holding companies. Altria Group is one of the core holdings, which has been a core dividend holding for a long time and a dividend aristocrat. We have Verizon, AT&T, Walgreens, Philip Morris, Dominion Energy, Edison International. These are all core dividend holdings that a lot of people who hold dividend stocks will invest in these individual stocks. So they focus on those dividend heavy companies so that they can get that higher yield for you. Now, number 2 is from my all-time favorite ETF provider, which is Vanguard. And this one is VYM. And VYM is an ETF that also invests in US companies with high dividend yields. And this one tracks the FTSE High Dividend Yield Index. Now, if we look at the overview of this, you can look at some of the key things inside of VYM, including the yield. So the yield on this one is slightly lower at 3.09%, and it has 469 total holdings inside of this ETF. The turnover ratio is much lower at 9%, which is what we like to see, because the higher the turnover ratio, the more taxes you're going to have to pay because they're buying and selling more securities. And the expense ratio is way lower than the first one, which is why I absolutely love Vanguard, because their fees are so low at 0.06%. Why is this powerful? Because fees will absolutely destroy your wealth building ability. Even a 1% fee will cost you hundreds of thousands of dollars, if not millions of dollars, depending on how much money that you have invested. So making sure you keep those fees low is very important. And this fund was created back in 2006. So let's look at some of the total returns that we have here since 2006 so that we can get an idea of how this fund has performed over that time frame. So you can see over the last couple of years, if you look at 2019, we have a 24% rate of return, 2020, 1.14, 2021, 26% rate of return, 2022, a much worse return at negative 0.46 in that bear market. So as this fund progresses, you can see all those returns there from Portfolio Visualizer. And if you want to look at all the rates of returns right now, if you're watching this in the future and you want to see the exact returns today, Portfolio Visualizer is a great place to do it. That's where we get a lot of our data. You can also go to ETF.com. There's a bunch of other great places there as well. In our Ultimate ETF Guide video, we talk through how you can analyze ETFs just like this. So if you want to learn how to do that, make sure you check out that video after you watch watch this one. Now, the top 10 holdings of VYM are going to be actually much different than the first one we had available to us. So ExxonMobil is number one at 3.35%, which has been a dividend aristocrat for a long time. Johnson & Johnson, an amazing company, is number two at 3.03%. JP Morgan Chase, which is Chase Bank, is at 2.82%. You got Procter & Gamble, a staple, 2.61%. Chevron, 2.34%. Home Depot, 2.23%. AbbVie, 2.09%. Merck & Co., 2%. And Broadcom and Pepsi at 1.8% and 1.87%. Now, with these top 10 holdings, if I was personally trying to evaluate between these top two ETFs that we've been talking about thus far, I like the Vanguard top 10 holdings much more than I like for the iShares DVY top 10 holdings. So for me personally, when I'm doing evaluations like this is the things that I look at. I look at some of these top 10 holdings and try to figure out, hey, are these companies that I would love to own? I think Vanguard's list is a much better list. Sure, the dividend yield might be slightly lower, but the expense ratio is also significantly lower in this list. And I like the top 10 holdings more. So for me, you can kind of see this is one that would fit my investing criteria much more than the first one would. Now let's look at the third one. So number 3 is Schwab's US Dividend Equity ETF, or SCHD. This is a very, very popular dividend ETF. In fact, it is one of the most searched dividend ETFs out there. It's a absolutely fantastic fund. It actually invests in the Dow 100 index of some of the highest paying dividend companies in the world. So let's look at some of the key metrics on this one, because this fund information has some different things that you may want to consider. First of all, the yield is very high at 3.57%. And so at that 3.57% for the SEC yield, and then there's the TTM yield at 3.61% that you have available there. Now, this one only has 100 holdings. So you can think of the difference between the Vanguard fund, which had over 400 holdings, and this one only has 100 holdings. And it has a 14% turnover ratio, which is very low, and a 0.06% expense ratio. So fantastic metrics on this. Higher dividend yield, lower expense ratio. It does have a lower core holding, but this is fantastic thus far in terms of what it's going to do. Now, let's look at some of the latest returns at the time of recording this. So over the last couple of years, we have 2019 as 27.28% returns. 2020, we have 15.08%. 2021, 29.87%. And then at the time recording this, all the way up to that date is 3.23%. So the top 10 holdings here that they have are AbbVie, PepsiCo, Merck & Co., Coca-Cola Company, Chevron, Home Depot, Verizon, Broadcom, and Pfizer. All great companies there, and they have a very high weights and allocations in those because there's only 100 companies inside of this. So you're going to see that holding allocation be much higher inside of something like SCHD. SCHD is a fantastic option. So this is one where you can put it at your list and say, hey, do I like it? It has a low expense ratio. It has a high dividend yield. And so it's got the perfect combination there if you like some of those top 10 holdings, and you can look at some of the other holdings that it has available there as well. So check out Portfolio Visualizer, see if that works for you. Now, if you're trying to construct a portfolio, a cool thing that you can do is see how much these overlap, and you can use something like an ETF overlapping tool, and that's going to allow you to see, do these funds overlap with some of their top 10 holdings. Now, number 4, we are looking at SDY, and SDY is Spider's S&P 500 dividend ETF. So it invests in companies in the US stock market within the S&P 500 that have been paying a dividend for a very long time, and their high dividend yield aristocrats index. So I love dividend aristocrats, which is why this made the list, because dividend aristocrats are something that for a long time, if I was going to invest in just dividend stocks, that's what I would be investing in, is dividend aristocrats. So this is a great index to be following if you're looking at this one. Now, this has more mid-cap value than large cap value if you look at some of this fund information, and the yield is a little lower, so 2.64% on this yield, and a higher expense ratio at 0.35%. Now, it only has 124 holdings when you look at this fund. So if I'm looking at something like this with less than 125 holdings, would I prefer SCHD with the higher yield and lower expense ratio? Most likely, for me personally, that's what I would look for instead of this one, because this expense ratio is high. It's above that 0.30%. It's something I'm not truly going to look at much harder if I'm trying to decide between this and SCHD personally. Now, if you look at this one, we can look at some of the returns in the last couple of years. In 2019, it had 23%. 2020, it had 1.79%. 2021, 24.8%. 2022, still starting off, but it is positive. It was positive in 2022, and then 2023, we are looking at the same returns as around everybody else because the market is somewhat coming out of a bear market now. Now, as we look at some of these top 10 holdings, you can see it's a very different group than maybe some of the others. So we have Walgreens Boots Alliance, 3M, which is a fantastic dividend aristocrat, National Retail Properties. So we're looking at some REITs involved in this one, Real Estate Investment Trust. We got Realty Income, which is a monthly paying dividend REIT. We have Southern Company, International Business Machines Corporation, we have T. Rowe Price Group, AbbVie, Franklin Resources, and Essex Property Trust. So this has a high mixture of REITs involved in the top 10 holdings. So if you want a little more real estate exposure, maybe this is something that you look at because it does have some top 10 holdings with REITs in there. I just do not like the expense ratio and the dividend yield that are coming out on top because you invest in these for a high dividend yield, and that yield is just not high enough. It's not much higher than VOO or VTI, where it's just blowing me away, where I need to invest in a dividend ETF instead of something like VOO or VTI, which is like the S&P 500 ETF or the total stock market ETF that are out there. So there's some great ones out there. We've done deep dives on VOO and VTI if you want to check those out in addition to watching this video. So next one is the Invesco S&P 500 Dividend Low Volatility ETF. Now, Invesco is a company who has a lot of different options that are out. They have a lot of new ETFs that have come out as of recent, and there's a lot of hype around some of their ETFs that are out there. This one specifically tracks the S&P 500 Low Volatility High Dividend Index and tracks companies with high dividend yields and low volatility. So if you don't like that volatility ride, taking that big ride up and down as much, it's trying to find companies that maybe will have less volatility in the long run. Now, for this one, we are going to look at some of the fund information here. We have a yield at 4.6%. So this one is yielding our highest yield of all of these other dividend ETFs, which yield is not the only thing to look at. But if you're investing in a dividend ETF, you want to make sure that you can look at something like this, which is why this made the list, because the yield was so high. Now, the expense ratio is 0.30%. For that yield, not really terrible for that yield. It's still higher than you would like it because you can even get a robo-advisor for that same expense ratio. But at the same time, it is something where it's definitely interesting to look at. Now, it has the lowest amount of holdings on this entire list at only 51 different holdings inside of this ETF. So we're going to see higher weights on some of those top 10 holdings as we go through this one. And then you can look at some of the returns here. It's been around since 2012, so you can look at the past decade or so and see what these returns are. But it's got some very nice returns over the last decade and really has been a great performer, as you can see here over the last decade. Last couple of years, 2020 negative 10%. It took a big hit in 2020 compared to some of these other ones. 2021 24.61%, and then you can see some of the rest there. Now, the top 10 holdings of this SCHD are companies like Altria Group is number one, AT&T, Verizon, Kinder Morgan, Simon Property Group, International Paper Company, Dow Inc., Walgreens Boots Alliance, Williams Companies, and Pinnacle West Corporations. So this one does have a few companies in there that are very different from some of the other holdings, top 10 holdings in some of these other funds. So you can say, hey, is that dividend yield make sense? You can run the numbers, check your risk tolerance, look at all 51 holdings. Because this has such a small amount of holdings, are these holdings that I want to be holding for the long run? Would I buy these individually if I was going to construct a portfolio? Would that make sense for me inside of this as well? Now, one thing to note on this is this fund has an extremely high turnover ratio, even for the amount of holdings that it has. It only has 51 holdings, but the turnover ratio is 60%. So you got to take that in consideration and see what are the tax implications, because the higher the turnover ratio, the greater the tax implications are for you, the investor, because they're buying and selling a lot of securities. So with 51 holdings, you got to make sure that you understand what those tax implications are, and that means that dividend yield is going to change a lot. If they're having that much turnover, that's one thing you got to watch out for as you look at this one, in addition to making sure you run the numbers on this and seeing if it fits your risk tolerance. Listen, I hope you guys learned a ton about some of my 5 favorite dividend ETFs. If you guys have any questions, make sure to leave them down in the comments below. Don't forget to like, subscribe, hit that notification bell, and we have our podcast on this channel now. The Personal Finance Podcast is now here on the Andrew Gincola YouTube channel, so make sure that you check that out. That is a podcast that we have hundreds of thousands of listeners every single month, and would love to invite you to join us on the Personal Finance Podcast. You can watch it or you can listen to it on your favorite podcast player. Thank you guys so much for watching this. If you want to learn more about index funds and ETFs, we have a course called Index Fund Pro, which teaches you how to invest in index funds and ETFs, and you can check it out down below in the description as well. Thank you guys so much. I truly appreciate each and every single one of you, and we will see you on the next video.